I recently listened to an interview of Quant Network CEO Gilbert Verdian, so you don't have to. And today I will be summarizing information including Quant Network's progress with CBDCs, tokenization, blockchain, and much more. So if you want the best QNT information around, make sure you are subscribed, leave a like down below, and let's get straight into the video. Okay, a quick reminder, this video is not financial advice and for entertainment purposes only. I hold most of the cryptos that I speak about on the channel. Nothing is guaranteed and you could lose all of your money. Also, I forgot to show the previous giveaway winner. There is proof on screen. Now on to this video. What was the inspiration? This interview on Spotify by FinTech Futures, what the FinTech, and the topics are blockchain, CBDCs, and programmable payments. These topics are still important today, as in a recent study has shown financial firms are looking to increase their investment in AI by 21%, the big craze right now, but still 20% for blockchain and DLT. Okay, so the first highlight I want to go over is the digital pound. Now, in the previous QNT video, we went over Quant Network's involvement with digital euro, digital dollar, but here we have official confirmation of the digital pound.
The work that we've been doing is around using our platform, which is called Overledger, to create central bank digital currencies. We did the work with the Bank of England and the BIS on Project Rosalind. We issued the digital pound. We created the infrastructure around it, around the API, and then we allowed the industry to test in a real world setting what a central bank digital currency looks like for them in terms of the payment flows.
And so they're creating the infrastructure for CBDCs, Project Rosalind, and the digital pound. Billions transacting on the Overledger network. Also, privately issued stablecoins and CBDCs need to be able to interoperate, whether it be digital pound, digital euro, commercial bank money. They need to be able to interoperate between one jurisdiction to another. That is where Quant Network comes into play. And just by understanding that, before we go any further, it makes it a solid long-term bet for the future. And later in the interview, we hear that real-world asset tokenization is enabled by Quant Network, tokenizing commercial bank deposits, securities, equities, instruments, many using Quant in the background without even knowing it. And tokenization itself has the ability to create new assets or make existing assets that are illiquid liquid, like fine art, collectibles, gold, silver, real estate, much more, and also increase accessibility through fractionalization of ownership for private jets, yachts, and also democratizing investments for private equity funds, allowing investors who are not high net worth individuals or institutional investors. And so it's giving these assets better representation and making them easier to transact. In itself is $1 trillion market. Now currently in crypto, prices are mainly based on speculation, so low cap cryptos based around the real world asset narrative are probably going to do the best. But over the long term, projects like QNT will thrive more towards that 2030 date of the final market predicted to be around $10 trillion. And there are some institutions and capital markets using tokenization, and a lot of the names sound familiar, as Gilbert states here.
So we're seeing a lot of asset managers take existing funds or issue new funds, but in tokenized form for those reasons. And most of the venues, we've got SDX who are able to handle digital assets in Switzerland. We know there's work being done in the London Stock Exchange. NASDAQ have started on the ESG side with carbon credits that are tokenized. So we're seeing the venues adopt their platforms to coexist with digital assets, but also transact with traditional assets as well.
And so institutions are looking into tokenized funds, which is allowing liquidity pools and new investors, as doing it in a traditional manner is heavy and regulated. Now on to CBDCs. A lot of fear-mongering and misinformation around this topic, and I'm glad Gilbert went into it, which we'll play in a second. So the first part that CBDCs are bringing, something new, is allowing automation, programmability, adding logic to money. We live in a digital world, but we need more for money itself. So where a situation happens or a condition is met, you can tell money to do something. And Gilbert gives an example here.
Simple example, just on the consumer side, is today people get paid end of the month, let's say. You have your direct debits and your money is taken out on the same day. Sometimes, for no fault of anyone, your salary is not paid in on time or at the time you expect, or your direct debits are taken out earlier than your salary is paid. And then you get overdrawn for that particular day, which is a bad experience. It's bad friction, and no one likes that. So what you can do with a digital pound is you can potentially program it and say, when my salary comes in, 1 hour after it comes in, then take these 3 direct debits. So you're never overdrawn. So that logic is very simple from a consumer perspective, but the experience is very different because you don't get overdrawn. And then you can code that into your money and into your digital pound.
And so programmability with CBDCs is removing counterparty risk in manual things you had to previously do. A new form of payments with another use case from Quant Network QNT. So many benefits for the consumer, but still there are many privacy concerns. There's always been concerns with new innovations around payments and banking, as Gilbert explains here.
The thing is, we've seen the same type of behavior and concerns every single time there was a new innovation in banking and in payments, for example. So we saw people being concerned when we moved from cash to debit cards. They had this very big worry that everyone's going to, look at your transactions and why am I paying with this plastic thing? Cash is king. And then the same with check, and then the same with credit cards. And then, there is that fear of the unknown. And from a privacy perspective, what we've got in the banking system today applies. It applies to all forms of payments, including a central bank digital currency. And if people are concerned about government oversight and all of those things, monitoring, the governments don't need a CBDC to do that. I mean, if there is a need to monitor someone's transaction for whatever reason, for suspicious activity, for terrorism, for fraud, whatever it is, all the guidelines and regulation are there today to do that today, even without a CBDC.
And so the main 2 takeaways from that section is that the government do not need a CBDC to monitor someone's transactions. It can be done today. They're not there to monitor your buying behavior, more so the stability of the financial system. Also, when will CBDCs be here, as it's such a huge use case for Quant? Well, for ourselves, we can go on CBDC Tracker and see the process of research, pilot, and launched. But banks are currently looking how to implement, how to actually test it in business and commercial situations, and their end goal is by the end of the decade. But commercial banks do not want to wait. They see the benefits of programmability in commercial bank money, and they're looking to implement in 2 to 3 years, as they're past the experimental stages with the tokenized dollar and the tokenized euro. And they will all need to interoperate and be accepted across different networks. Quant Network is providing the infrastructure, and CBDCs are only one use case. Very valuable interview. Go and check out in the description down below. Going forward, the only thing I think of is an event with QNT, the future of finance, shown here by Tokenizer. If you want a project that is working with the largest institutions, companies, and entities in the world, your project is Quant Network. But that's going to be pretty much it for today's video. If you made this far in the video, thank you very much for watching. I'll see you guys in the next one.